Guys, what's up? Welcome to the Sunday Stock Talk. This is going to be where we break down the market, see what's going on for this week, and start looking at some things that will help give us an advantage into this trading week. So again, after that, we're also going to get into the 3 top stocks for this week so you can kind of have a game plan and understand what's going on. So right now, what we're looking at is the S&P 500, stock symbol SPY. So when we look at this, we get to assess where the overall market is going because the S&P 500, this ETF right here, tracks the top 500 stocks in the market. So this is going to show us the average movement of what the market is doing. Last Sunday, what we drew in here is we drew in a trend line, which shows that this market is in an upwards direction. It's always great to see when the market is going from the bottom left-hand corner to the top right-hand corner, and our lows are getting higher and our highs are getting higher because this means that we are in an uptrend, which is a very good sign to see for the market, right? We want to put our money in something that's going to increase in value. So when we see that it's increasing in value over time, that's a great place to put our money in. Not only that, what we also saw is that we had a level of support right here in this level. Why? Because we hit a resistance right here, and as we know, old resistance becomes new support. So whenever we break above a prior resistance level or a prior high, then we tend to come back down and retest that as support. And so again, we had that that level here, and we had a support level here because this was a resistance point here and then a support here. So we have our level of support right here where we expected the market to bounce. You can see here that we had 2 potential outcomes that we gave last week. So last week we were right here. We were looking for the market to gap up on Monday and continue higher, which is option number 1, or option number 2. We were going to come down, gap up on Monday and then come back down and head in this range, which is kind of where we are right now. We gapped up on Monday and now we're headed back down in this range. So now the real question is, where are we headed this week? So just to give you a bit of a heads up, you can actually look, and this is why I do this video later in the day, because if we go on this, we can do ES1, and that shows us what the market is currently doing. And so if we go here to a 5-minute chart, we can see here that the market has gapped up today. So this is showing trading history of today, seeing what the market is doing. So far today, the market has gapped up and it's moving a bit higher. So that's showing us that, hey, the market is semi-bullish already. So now let's return back to the S&P 500 on our daily time frame and let's look at what's going on. So let's move to a day. So you can see here, all right, we are now in our daily time frame. So this is what we're going to be looking at for this week. We are in a level of support. You can see here, this is a strong support zone. So just like I mentioned last week where we were going to come up and then kind of trade in this range, well, we're going to assume that right now. We're going to assume we're going to, that's a line. We don't want a line, sorry. We want a drawing. We're going to assume that we're going to stay in this range right here and then break higher after we built a level of support. Why? Because we have this strong level of support right here, which I'm going to delete this circle, but we have a strong level of support right here, and we have a trend line coming in. So we have just a very strong level of support, but it looks like we may need to validate this support a bit longer, which means we're going to bounce around in this range and then eventually head higher. Now, again, for those asking, Austin, what about a crash? When should we expect a crash? Well, as you can see here, this trend line has been holding very strong. So again, a crash won't come in until about the 450 level, 445 level. This will be our crash zone right here. If we start breaking below this level and we start heading lower, that's going to be when our crash has been signaled. Now, again, from more of a technical basis, I can pull up the Trinity Band indicator and it shows us, which correlates to what I just said, is that we're going to have a crash is going to be about about 45% likely at 445, about 50% likely at 430, and 90% likely at 414. And if we do start crashing, where we're going to crash down to is going to be roughly around this level, the 370, 380 level for a huge crash. For a minor crash, it's going to be down to 420. So again, these are the levels to watch out for. This is all included in the Impeccable Stock software, so that's going to actually do that for you and send out alerts as needed. But for what you need to know, our game plan right here is what we are expecting for this week, as to see the market bounce at this level and head higher. If we break this trend line right here around 445, 450, then we're probably going to head lower. So again, these are option number 1 and option number 2. So that's what we're going to be having our eyes on this week. Anyways, moving into the software. So again, picking out our top 3 stocks for this week are RC, CMO, and Cisco. So again, let's start here at CMO. So CMO is going to be a stock right here at $75, pretty affordable. What we can see here is that this stock averages about a 11.5% return every single year, which beats the market. If we follow the game plan here, which is buy at this level, take profit at this level, and stop loss at this level, we have a 1 to 5 risk to reward, which is very good, which means we're going to risk $1 to make $5, which is a very good risk to reward. Overall, you can see here that we tend to be pretty green and pretty positive. Our reds are actually a bit lower, so you can see a 1%, a 8%, a 3%, a 3.8 at the largest, but our wins tend to be a lot bigger, like a 26% return, a 4% return, an 8% return. So overall, it definitely does outweigh it for this stock to give us a positive yearly return. Anyways, that is the first stock, SEMO, so you can make sure to put that on your list if you like that stock. Another one coming from this dashboard is Cisco. Cisco is a stock that everybody should know. This is Cisco Systems. It is a big international company. Its trade price is around $56, so also affordable as well. You can see here that we average about a 12.2% return year over year if we follow this game plan, which is amazing. Again, we have about the same setup here where we're green for the most part, and our green wins are large. We have about a 10%, a 5%, an 18%, an 8%, a 24%. So we have these good returns, and then we have these minor losses here, which overall adds to a positive performance. So again, that's what you can expect off this stock. And again, about a 12% gain is awesome with a 1 to 4 risk to reward. Risk $1 to make 4 is a great deal as well. The next stock here I found on the screener, so it's not on the dashboard page, is going to be RC. So RC right here, Ready Capital, is going to be definitely a cheaper stock for those who don't have as much money. So we're going to look here about the $16 price point. Again, we have about a 30% yearly return, which is really good. So about a 120% return for over the last 4 years. So it's about a 30% return given we follow this game plan. So again, you can kind of see what to expect here, where we do have those losses, but they're a lot smaller than our overall gains. So RC is definitely a great stock to watch. If this is not on your watch list or not something you're watching already, I would check it out. You have about a 1 to 5 risk to reward as well. So RC is definitely great for that. Now, I do have to put in mind is that these stocks will only perform well if the overall market performs well too. If the overall market crashes, of course, these stocks aren't going to play out well. So again, we want to watch to see what the overall market is doing. If the overall market tomorrow ends up crashing down to around 445, then there's no reason to buy these other stocks because the market is performing badly. We need a market to be trending and to be green to help the rest of the market. So again, understand that the market will have a high effect on how these individual stocks do. So for those being like, oh, I lost some money on some stocks this week. Well, yeah, the market ended up gapping down. So of course that happened. Anyways, that's just something that I want to remind you about. Anyways, guys, thank you so much for watching this video. I do this every single Sunday. So please smash that subscribe button if you enjoyed. Anyways, guys, I will see you in our next video. Make sure you take a look at RC, SEMO, and Cisco for the top stocks for this week. Anyways, guys, see you later. Have a great week.